Morning, grade 12s. This is Mr. Chauke. I'm a professional teacher for accounting. If you're watching this, you're definitely at the right place. Please don't forget to hit that subscribe button down there, and I promise you that will make your academic problems a thing of the past. So don't forget to subscribe to our channel, share this lesson with your friends, and also if you want us to help you with accounting, you are more than welcome to get in touch with us by using the details that are available in the description of this video. With that out of the way, let's get into the lesson. So now, like I said, in this lesson we're going to be focusing on companies ledger accounts. So we are going to get into the lesson. Should you have any question, you are more than welcome to leave your questions on the comment section. So in this activity, we are required to do the following accounts: the ordinary share capital, retained income, SARS income tax, ordinary share dividends, and also the final account, which is appropriation. And we should also be able to close off these accounts correctly at the end of the year. Now here they're saying the information below relates to Winelands Ltd for the year ended 28 February 2021. Very important for us to know when does our year end and when it starts. Remember, if our year ends on 28 February 2021, it means it started on 1 March 2020. So here they are saying that the company was registered with an authorized share capital. Remember, authorized share capital, it means this is the maximum number of shares that we are allowed to issue. So this company was allowed to only issue 1 million shares, and then they're saying that 600,000 of these shares were in issue on the 1st of March, which is the beginning of the current financial year. So when we started our present year, the number of shares issued amounted to 600,000 out of that 1 million authorized share capital. Now that information is going to play to come in very handy for us when we do we calculate the average share price. Okay, so please keep it in mind. So here's the information. We are given the opening balances for our ordinary share capital, retained income, and also SARS income tax. So what you need to do, you need to make sure that you always start by inserting your opening balances. Okay, so what we are going to do, we are then going to make sure that we start with what we're given. So our opening balance for our ordinary share capital is 2,100,000. So I'm going to start with that. Remember, we are going to, when we write this, we are going to say 2020, it will be 2020 March the 1st. Then we say our balance brought down, which is 2,700,000. And remember, this ordinary share capital is an owner's equity account, so it increases on the credit side and it is reduced on the debit side. Hence you see the opening balance being on the credit side. Okay, I hope you get that. Let's go to the second account. Our second account is our retained income, so we need to check how much is the retained income. Remember, our retained income is also an owner's equity account. It's also an owner's equity account, so it increases on the credit side and then it is reduced on the debit side. Okay, so remember, it is reduced on the debit side, so you must always try to remember the signs. So we are going to have our opening balance here, so it will be 2020 March, and then the first, then would have our balance brought down. This is also known as your opening balance, but you can't write opening balance, you need to write balance brought down. So our opening balance for this is 737,100, so we'll definitely write that 737,100 so that we can get that 1 mark for the opening balance. And then the next account that we have is SARS income tax. If you look at this, our SARS income tax, we are given our opening balance and also the closing balance. So if you look at this, at the beginning of the year, our opening balance is on the credit side, meaning that SARS is a liability, so we need to start by that. Okay, so in this case, we are looking at SARS as a liability. Remember, SARS is one of those accounts that can be both, and it can sometimes be an asset, it can sometimes be a liability, so it will depend. Okay, so in this case it's a liability, so we'll start with the opening balance. So if it's a liability like this, it means the opening balance is on the credit side. Okay, so this will be the credit side and then this will be the debit side. No, but for this, remember, I'm not going to write the plus or minus, because the account is sometimes a liability and sometimes an asset. So I'll just put the opening balance here. So remember, it's 2020 March the 1st, and then we'd have our balance brought down, and then the opening balance is 8,500. Okay, now let's check. Remember, we were also given the closing balance for this. So now the closing balance for this at the end of the present financial year is on the debit side. So which means before it became on the debit side, it was on the credit side. So I'm going to come here and say 2021 February the 28th, then I'd say my balance carried down, which will be the same as for next month. So it will be 2021 March the 1st, then balance brought down, and then our amount according to this, they said it's the amount is 5,000. So I'll put that 5,000 this side and also this side. Then I've already earned some marks on what they've given me. Here I have 2 marks, and then on here I have 1 mark, here I have 1 mark. Okay, so it's easy to earn marks. So now let's get into the lesson without wasting any time. Let's get into the transactions. So the first transaction says that on the 1st of March, remember the dates are very important. They said on the 1st of March, the amount due, meaning that what was owed to SARS, they said it was paid via EFT. And remember, when we pay, the journal entries that we are debiting SARS income tax and crediting our bank account. Okay, so remember the journal entry, you debit SARS income tax and you credit your bank account. Unfortunately, here we were not required to also do the bank account, so we will only come here. So what they're saying is that this liability that we are owing here, we paid it on the 5th of March. So we are definitely going to make sure that we show how that was done. So we are going to write it now. So remember, it's going to be 2020 March the 5th, and then we'd have bank. Remember, when we pay, we are using the cash payment journal, and the amount that we're going to pay is what we are owing here, which is 8,500. Then we are done with the first transaction. Very important for you to know the journal entries for this. So we are done with the first one, and then the next one, they are saying that provisional income tax was paid to SARS for the year in 2 equal, keyword 2 equal, meaning that they would be the same. So we need to remember this, that this is 2 equal installments, and also we must remember the date. The first one is on the 1st of September, and then the second one is on the 24th of February 2021. But we must really try to remember that the 2 amounts were equal, and they did not give it to you, so it means you will probably use those amounts as a balancing figure. Okay, so but we know that the payments were done on the 1st of September 2020, so maybe we can insert that information. Remember, we're going to say 2020 September the 1st, then we'd have bank, and then CPJ. Okay, then we are going to have the 24th 2021 February 24. Then we'd also have bank CPJ, and then we'll go and look for the amount for these. But for now, we don't know those amounts, so we'll continue with our information so that we don't waste time. Next, they're saying that income tax for the financial year amounts to 30% of the net profit. So we don't know if we'll be given the net profit or not, but we just know that income tax is 30% of the net profit. This information is very important. Okay, remember, it's 30% of the net profit before tax. And then next, they're giving information regarding the shares. Now, so this is what we need to do. We need to go back to our drawing board and draw a timeline. Remember, our year started in March, then we'd have April, May, June, July, August, September, October, So we'd have October here, October, November, December, January, February here. So when we started the year, remember we had 600,000 shares issued. So this information will help us a lot when we do our calculations. So remember here they're saying on the 31st of August, all unissued shares were issued at 500 cents per share. So remember 500 cents, if you divide this, they said on the 31st here what they did, all the unissued shares, they were issued at 500 cents. Remember 500 cents is equals to 5 rand. Okay, so now they are issuing those shares. So remember, once you issue shares, you are going to get money for that. So we need to try and remember how many shares were unissued. If you remember at the beginning, they issued 6 million out of 1 million. So it means that if you say if you say 600, if you say 1 million, and then you subtract the 600,000, you are going to be left with 400,000. So it means those 400,000 shares were not issued. This is what they are referring to. Okay, so when we do that, we are going to say 400,000 for this. What we are going to get, we're going to say 400,000 multiply by 5. Okay, so let's do it quickly. So 400,000 multiplied by 5 is giving us 2 million. So it means that we will get 2 million from the issue of the shares. Okay, but we need to also update our timeline so that we don't forget. Let me close, sorry about that, let me close this so that it doesn't disturb me. Okay, I'm going to go back to our timeline here. So remember, the 31st of August is here. According to the information, this is where we issued. They said we issued on the 31st of August 2020. So this is where we are. We issued an additional 400,000. So to date, the number of shares we issued here to date is 1. So 1 million shares were issued. So when we go to our journals, we need to show what happens. Remember, if you issue shares to people, they are supposed to give you money for that, right? So when we go to our ordinary share capital, we are going to show that on 2020 August the 31st, we received money in the bank, right? CRG, and then what we got from there is 2 million. Remember, it's 400,000 times 5 rand as we calculated it here. Then you are done with this part. Remember, the journal entry for this will be debit bank and then also credit ordinary share capital, which is what we've done here. Remember, we're not doing the bank account like I said. I hope this makes sense. Now let's go to the next transaction. The next transaction says on 30 November 2020, the director repurchased 120 shares at 620 cents. So which means those shares were purchased at 6 rand 20. Very important for us to figure out. And then they're saying that they bought, the directors purchased them at 6 rand 20 cents per share from a retired shareholder, meaning that this person is no longer part of us. And they're saying that this shareholder originally purchased his shares on the JSE at various times and at different prices. So obviously, remember this person, when he or she was busy buying shares, they were bought in different times, and also the price was not the same. So whenever shares are purchased, this is what we need to do. You need to look for two things. You need to look for the average share price, and then you also need to look for what do we call it? You also need to look for the difference or the loss. Okay, so now let's check. Remember here the repurchase happens at the end, or closer, it is the last thing that happens. So whenever the repurchase, it is the last thing that happened. You're going to use your opening balance and also the issued shares before the repurchase to get the value or the average price of the shares. So in order for us to do that, we are going to go to our calculations. At the top, remember I said the formula that we will follow. We will use our opening, and then also plus, okay? And then the same will happen. But you are in, and then here is open issue that is in the form, okay, give us the average price. But remember, if the repurchase in mind, so in this case, 2 million one, if, oh sorry, this is 2 million 700,000. Let me write it correctly. So it will be 2,100,000. I can notice that this looks like a 7, so I'll just correct it. So remember, it's 2,100,000, right? So I'm going to put it like that. 2,100,000, not 700,000. My apologies about that. Now, when we continue with that, for us, we know that the value of the the opening balance of the shares and the issued will be the sum of these two. So it will be 4,100,000, because it will be 2,100,000 plus 200,000, which will give us 4,100,000. So we'd have 4,100,000 at the top. Okay, and remember, before the repurchase, all the shares were issued, if you remember, before the repurchase, because the repurchase took place. When we look at the information, we realize that the repurchase took place on the 30th of November. So it means if we go to November, that's where the repurchase takes place. So if we go to our timeline on November, we are going to say minus, I forgot how many shares were repurchased, so let's check. So it's minus 120,000 shares. Okay, so we'd say minus 120,000, so which means how much will be we left with? So you would say, if you say 1 million, then you minus 120,000, you are left with 880 shares. So it means after they repurchased, only 880,000 shares were issued. Okay, so now in this case, when we look at the number of shares before the repurchase, the number was still 1 million. So we'll divide this by 1 million, because it will be that opening 600 plus this the 400 of the new issued. So if you divide this 4,100,000 divide by 1 million, it will give us 4.10. So our answer would be 4.10. So this is the average price. And obviously, if you look at the value that those shares were issued by, you would realize 620, we need for 4.10 will be the average, and then the difference between 620, or let me put it like this, I'll put it in this triangle so that it can make sense for us. So remember, this is like this. Would have the amount for ordinary share capital, and then the amount for the retained, right? So now, and then here it is for the cash flow. Remember, in the cash flow, we'll take the entire 620. In the ordinary share capital, we will use 4.10, and then the difference would have to be borrowed in the retained income. So 620 minus 4.10, it gives us 2.10. So this 2.10 will have to be taken from the retained income. So we need to update the ordinary share capital and the retained income with this new information that we have collected here. So let's go to our ordinary share capital first. So remember, the repurchase takes place in on November, so we need to come back here. So remember, we're going to say we're going to say 2020 November, and then the 80th. Then we are going to say bank CPJ, because we are paying. Then here we're going to say 2 rand 10 multiply by 120,000. Okay, so let's see how much we'll get. So if you say 2 rand 10 multiply by 120,000, you are getting 252,000. So it means that sorry, here it's supposed not to, this one is supposed to go to, is not supposed to be 210, it's supposed to be 4 and 10. Let me correct it. So here it's supposed to be 4 and 10, 4.10. Okay, so we'd say 4.10 multiply by 120,000, and then it gives you 492,000. So this 492,000 will come here, and then when we go to the written income, that's when we will use the 2 rand 10. So remember, it's going to be 2020 November 30, and then we'd have bank, okay, and then CPJ, and then we show that we set 2 rand 10 multiply by 120,000. Okay, so let's see, 2 rand 10 2 rand 10 multiply 2 rand 10 multiply by 120,000. It is giving us 252,000. So we'd have our 252,000 here. Then we have shown the effect of the, remember, in the ordinary share capital you use the average share price, and then in the retained income you use the difference. If you remember from our triangle here, cash flow will take 6 rand 20, and then this other two will use these two amounts that we have here. Okay, now since if you look at the transactions, you will see that there's nothing that will affect the ordinary share capital. So when you are smart, you just make sure that you now close this off. So remember, the total here will be 4,100,000, and then also here the total will be 4,100,000. okay, now then when you are done with this, we just need to close this off. So we're going to say 2021 February 28. Remember, the shortage is this side, so we'd have our balance carried down, okay, which will become the brought down for next month. So it will be 2021 March the 1st. Then we'd have our balance brought down. Then let's see, if we say 4,100,000 minus 292,000, it leaves us let me see, 4,100,000 minus 492,000, it leaves us with 3,608,000. So that 3,608,000 will come here. Then we also have 3,608,000. Now here what you need to remember is that calculations that have got calculations like this one here, remember you must try to show them. Here we had issued, we said 400,000 multiply by 5. It's very important for you to show those calculations. If you've calculated something, show it in brackets. Okay, if they've not giving you enough space, show it on the sides so that you can also earn marks. Okay, so the ordinary share capital is completed. SARS income tax, we are not yet there. Ordinary share dividends, we are not yet there. Okay, so we need to get the information. So let's go to the next part. Now, next they are saying that dividends on the 31st of August, interim on 31st August 2020, interim dividends of 25 cents per share were paid to shareholders. The new shares do not qualify for interim dividends. See information C. Now you need to remember when were the dividends paid, and then when were the new shares issued. So remember, there's no way if I buy shares today, there's no way I can earn dividends on that. So it means they will only pay those dividends of 25 cents on what they had before they issued new shares. So which means that they will pay those dividends on those 600 shares that they had at the beginning. So we'd say 600 multiplied by 0.25. Let's see how much we will get. So if you say 600,000 multiplied by 0.25, it gives you 150,000. So we're going to show this in our records here. Remember, the payment is done on the 31st of August. So we're going to come here. Remember, this is the credit side, and then this is the debit side, and this account is treated more like an expense. Okay, so that's why it must be closed off to appropriation. So we'll say 2020 August 31st, and then we'd say bank, and then remember it goes with CPJ. Then we show that the calculation is that 600,000 must be multiplied by 0.25. If you remember, then the answer that it gave us was 150. So that 150,000 will come here. I hope it makes sense. And then the next part of the transaction says that they are saying that a final dividend of 42 cents per share was declared on 28 February 2021. Only shareholders on record will receive the final dividend. So meaning that only the shareholders that we have on the share register will get the dividends. Now our share register shows that when the year ends, we had the number of shares that we had is, remember, it was 880,000. So they are going to pay only on those 880,000 shares. And you must remember that it means that the shares that were repurchased, those people will not get a dividend because those shares are gone. Okay, so you must try to look at those little details. So we got the information, then we can continue with this. So when we do the calculation, remember the payment took place on 28 February, so at the last day of the year. So we're going to come here and say 2021 February the 28th, and then we are going to say shareholders for dividends. Remember contra accounts, right? For dividends. So because I don't have space, I'll show calculations here. Remember, they said we are declaring by how much? I think it was 42 cents. So we'd say 0.42 times 880. So it will be 0.42 times 880,000. Remember, these are the shares that are available on the share register. So 880 times 0.42, it is giving us 369,600. So that 369,600 will come here. Okay, then when we are done, we add these two amounts, then at the end of the year we'll post these two appropriations. So remember, it's 2021 February the 28th. All this will be posted to appropriation, and remember, appropriation is a general account. So also this will go to the general journal, the shareholders for dividends, because there's no journal for it beside the general journal. So when we do our part, we are going to add this. We're going to say 150,000 plus 369,600, which gave us 519,600. So that 519,600 will have to be also brought here, 519,600, and then also 519,600 here. Then remember guys, appropriation has been credited, as we have credited ordinary share dividends by appropriation. So this ordinary share dividends will also come this side. Now remember, our appropriation, we are going to use it to pay our income tax, right? We're going to also use it for our ordinary share dividends. This is how we are going to share our profit. And then once we've paid these things, the rest will go to our retained income. So we'd have retained income here, which will be the new money that we are reserving for the current year. And then remember, here would have net profit before tax, and then in the folio you can write general journal, but I don't have space for that. Okay, so now remember, this amount from ordinary share dividends is 519,600. It must come on the debit side. Remember, this is the debit side and then this is the credit side. So double entry says that because we credited ordinary share dividends, so therefore appropriation should be debited by ordinary share dividends. So that 519,600 will come this side, and then in that way we have dealt with double entry. I hope this makes sense. Now let's go to the other parts of the transaction and continue. So here they're saying that the company made a net profit before tax of 1,475,000. Remember, this is net profit before tax, so it will come here, 1,475,000. And also remember that we were told that income tax is 30% of the net profit before tax. So that information is now coming in handy. So to get our income tax on the SARS income tax account, we're going to come here. So remember, income tax is for the year, guys. So we're going to write 2021 February 28, and then we'd have income tax, and then the calculation will say 1,475,000 multiplied by 0.30, which is 30%. So let's see, 1,475 times 0.30, it is giving us 442,000. 442,500. The reason why we are crediting SARS income tax is that the journal entry for this says we must debit income tax and we must credit SARS income tax. Now remember, in appropriation we are saying that appropriation should be debited by income tax, so that income tax will also come this side. Remember, the amount is 442,500, so we'd have that 442,500 this side. Then if you look at this, guys, you can see already that appropriation, the amount that will be taken to our retained income will be our balancing figure, so we can close off appropriation. So we're going to say 1,475,000 this side, 1,475,000 this side. Then if we take 1,475,000 and then we say minus 519,600, and we also say minus 442,500. It's going to give us our new retained income. Okay, so remember, if we say 1,475,000 minus 519,600 and then also minus 442,500, it is giving us 512,900. So our new retained amount, the money that gets retained for the current year is 512,900. So we'd have that 512,900 here, and then remember we are going to bring it on the credit side of retained income because we are keeping aside more money for this year. So we're going to come this side and say 2021 February the 28th, and then we'd have appropriation, and remember this is from the GJ, and then our amount is 512,900. So we'd have that 512,900 this side. Then we need to check between the two which side is the biggest, because you can see that our appropriation showed that our retained income new amount for this is 512,900. Maybe let me confirm again. So remember 1475,000 minus 519,600, and then also minus 442,500, then it gives us this amount that we have here. Then when we go to our retained income, we can then try to also, okay, before we do that, we forgot to close off our SARS income tax, but we can do it still at the end. It is still fine since we are now dealing with the retained income. So let's see, guys. Remember, we need to get the bigger side and have a balance carried down here. So remember, we'd have 2021 February the 28th, and then we'd have the balance carried down, which will become the balance brought down for next year. So 2021 March the 1st, and then it becomes a balance brought down. Okay, now let's see what is the difference. So if we say 737,100, and then we say plus 512,900, it is going to give us 1,250,000. So we'd have 1,250,000 this side, and then also 1,250,000 this side. Then it means that we can use this to get our new balance for the retained income. So we'll take this amount and say minus 252,000, and it gives us 998,000. So our new balance for retained income is 998,000. Okay, so we are done with our retained income. Now the last account that we have to close off is our SARS income tax. You can look at all those other accounts are closed, so we just need to close off our SARS income tax. Now in order for us to do that, we need to remember where are we going to have the balancing figure, but obviously we are going to balance with the credit side because the two equal amounts that we need to look for are on the debit side. So let's do it. So if you say 8,500 plus 442,500, and then also plus 5,000, it's giving you 456,000. So we'd have 456,000 this side, and then also 456,000 this side. So if we say 456,000, then we say minus 8.5, and then it gives us 447,500, and then we divide that amount by 2, it gives us 223,750. So we'd have 223,750 this side, and also 223,750 this side, because they said that they made equal monthly installments. And guys, this is how we do the Companies Lrdger Accounts. Unfortunately, the lesson might be around 30 minutes or so because I did all those accounts in one lesson, and remember, I'm trying to explain in a way where I don't rush you but makes sense to you. Now if you want me to become your personal tutor for accounting, you are more than welcome to get in touch with me by using the details that I've provided in the description of this video. Thank you so much for watching, guys. May God richly bless you. Shalom.